Shares of Boeing are moving higher this morning. The aerospace giant posted a smaller than expected loss and revenue above expectations. Boeing is also postponing 2024 guidance in light of the problems surrounding the 737 MAX aircraft. In a note to employees, CEO Dave Calhoun said now is not the time for the company to update its financial and operational objectives. Joining us now is Noah Poponak, Goldman Sachs U.S. aerospace and defense analyst. Noah, great to see you today. How important is it to you, this pause in guidance?
Yeah, it's important. I think it makes sense. I thought there was a scenario where Boeing would have enough visibility into enough inputs to provide 24 guidance today, but it's not particularly surprising that they're holding off because it's pretty early in the process of bringing in the FAA, other third parties to evaluate their manufacturing process and the quality control. And, Boeing wants to and should respect that regulator's process. And so, today to provide guidance, which would have to assume units by aircraft, including the MAX, would just be getting ahead of that.
Sorry, go ahead. The important.
Yeah, they do state that they're at 38 a month on the MAX for the underlying production rate and 5 a month on the 787. So, the market and investors can extrapolate where the units can be based on that. And I think that's relatively in line with the consensus. You can get to earnings and cash flow in line with the consensus based on that. So that's an important piece that's in there. But I do think it makes sense how they've approached it this morning.
How much of that do you think is Calhoun deciding that he's taken a far different approach in this current crisis than his predecessor? How much do you think just withholding talking about financial objectives is because of the way it plays out in public headlines?
Yeah, I think part of it is a lot of what's happening here is unprecedented. It's hard to analyze. It's hard to predict. And so, for Boeing to take the approach as they kind of did early with the MCAS situation on the MAX of estimating the timelines that the FAA would come through with and when they deliver airplanes, you end up moving those targets around, changing things a lot, and it just doesn't show the proper level of respect to the process with the regulator that should be there. That's of the utmost importance right now. So the company has pivoted to that framework and philosophy, as you alluded to, and I think that's right. Boeing needs to get the product quality right. The demand for the product is really strong. The airlines want the product. They really just need to deliver it to specification. And so that's first and foremost, that's what they need to get right. So, to take that approach today, spend a few months with the FAA, with third parties in the factories, getting things 100% correct, the long term of Boeing can be really great if they can just do that.
Okay, so given that they've posted the charge for the fourth quarter, cash flow here of almost $3 billion, that topped analysts' consensus expectations. What did you think of the quarter, and what are you expecting for commentary on the call about the future?
Yeah, the quarter itself looks pretty solid. There's $3 billion of free cash in there, gets them to 4.5 for the full year. The guidance had been a range of 3 to 5, and they had said low end of 3 to 5. So $3 billion of free cash in a quarter. It's not perfectly fair to annualize it because there's seasonality. They had some advances timing in there, but Boeing will give you free cash flow quarters even at these very low volumes, where if you annualize it, you can see the earnings and cash flow power of the company. There's a cash flow machine in there somewhere if they can just deliver the airplanes to specification. So that number is very encouraging, stating that they're at 38 on the underlying MAX rate, 5 on the 787, which we just visited that facility in Charleston. That looked clean, optimized, ready to go to higher rates. Those elements of the quarter are encouraging about where the future cash flows can go. Even in the defense business, where the margins have been weak, that was a little better sequentially. Their services business really strong. So plenty of challenges here, a lot they need to improve still, but also some encouraging signs here about where the cash flow can go, especially relative to the current stock price.